All right, so let's go over some markets and see what's going on. So as I had mentioned over here, when we broke 58.66, this low in the ES 58.66 and went down to 58.09, I was looking to see if there would be a reversal. And the first thing to see is this breakdown bar, and to see if it has any follow through. But instead, we had volume come in from this low. So as it broke 58.66 and went to 58.09, the biggest buying wave in 49 waves came in. That big buying wave is right here, where volume goes up right here, and you have a, let me just show it to you. You got that. So as it broke, this happened. So someone is buying at low prices or buying the breakdowns. So they bought it and then hit one, pulled back right here, tested, and went to the 100% target. So typically, if you're considering two targets, it's 50% and 100%. That is a very realistic target. After that, you're going back into pullback mode. So it just went to that 100% target, which was above these highs, which is where liquidity is, and can sell into the stops that are above here. So when price goes above here, the shorts have to cover and buy their shorts, and the long can sell into the buying. That's why it's a very nice area to take profit. Above these highs, the stops are there. You basically offload into the stops. Anyway, next market is crude. Crude, this is the rally. This is the breakout bar. This was the prior breakout bar. I don't have the... Anyway, these are the breakout bars. Give me 1 second. And back, okay, so over here you have the breakout bar, you have the prior breakout bar, and a breakout bar can get tested. So let's take a look and just profile this. Check out this price area. So you have 3,528 traded at this price, where the average was 785 in this profile, and you have 3,585. So this is a good area to see if they trigger additional buying, because it's much higher than the average. So price should, when it comes down here, it's a good area to look for a reaction. Similarly on the ES, it already penetrated this area. There was heavy selling here, but they broke right through it, and now this is a level of prior selling, 60.22. Here you have 17,614 contracts at this price, where the average is 5,853. So this level, we'll see if they get active, if the sellers get active. Similarly, over here you have a lot of buyers. We'll see if they get active. You don't know whether they're going to get active or not until price hits those levels. These are just levels of prior buying, prior selling, and we want to see if they get active there. If they do and they continue to buy, it's obviously it's a good area to buy then. Anyway, so I mean, we'll see what happens. The price go back into those areas. What I'm interested now is in gold right here, 27.35. We're at 27.32. 3 more points. That's all. 3 more points. And we take this high, and we'll see if they offload into this high, causing a reaction or not, or do they break through it? Question always is, are they going to break through? Yes or no? Are they going to break through, or are they going to offload and reverse? So that's what we're going to see. It's only 3 more points. We'll see what happens there. And we have in Bitcoin, we also have a level right here, 103.685. We're at 101.425. So it's not too far away. We can tap tomorrow and see if we're going to break through or not. That's all. It's just how we're going to break through. Last time we went to this low, 91.735, by breaking it and going to 89.525, and look what happened. Look at the buying wave. Buyer stepped in, defending support. So this is just basic support and resistance trading, which Wyckoff and the Wyckoff style is very, really expert in. So we call them springs and up thrusts, but it's just buying at support and selling at resistance. This low had this bar, it had that much volume, biggest volume in 37 waves. 37 waves. Does that look like it's going to break down when you have the biggest buying volume in 37 waves? Obviously not, and that initiated the intraday or multi-day uptrend right here. But now we're at a resistance level, so it's getting really interesting. Whether they can break through or attempt to break through and see if they're going to go higher or they're going to reverse. So it's very, very nice area to start looking, both at gold and Bitcoin. The other is crude. I'm looking for a reversal back down here. ES also at 6022. 6002. 6,022.50. I want to see if it tags that level and how it reacts, because it already got above this high. It already got above this level. So the sellers here could not hold back the buyers. They could not hold back the buyers. So let me just see how much vol. As nothing. Let's take a look. It doesn't look threatening. The buying here doesn't look threatening at all. You see, the sellers are still stronger than buyers. So it might react to the downside and continue the downtrend. I don't know yet, but I will know soon. This is also a really interesting market because it's already predicting right here. You see, it's predicting a new low. A volume is predicting a new low already here. It's already predicting a new low. Okay? So during this pullback, already predicting a new low. But I'm looking for a little bit of a pop. Because when it came to this level, and this level has selling, 10,800 contracts, I think. I don't know. I think it's 10,822. But the average is 1,531. Average is 1,521, and here's 10,000 contracts across this level here. So as it went there, it reacted, and look at the reaction. Look at this. So obviously there's some selling here, and now it doesn't mean that buyers can't step in. But we want to see them fail, so you have to go to lower time frames and see the selling more clearly. Already there's some liquidity, generation over here. This is a weak pullback. This is a weak pullback. So I want to see one more break out above and fail. Right? I want to see upthrust of this area right here. I see the selling is already cooked. right here. Selling's already there. Biggest selling in 15 waves, right there, across that level of prior selling. So it makes sense. Now we just need one more and a failure. So next is copper. I really don't know. I mean, I thought it was going to reject off of this area because it's pretty strong, but instead it broke out. So we have a breakout here, and I think above here in these bars. So the pullback, I'll be looking for buys now because it's broken 1, 2 highs. So, and this is a lot of volume. Look at this. You think that's little? It's not little. It's bigger than 1, 2, 3, 4, 5. What do you think this is? You think this is meaningless when it's coming from buy low, from the low? Oh, someone's buying the low. So we want to see pullbacks. I'm looking for a pullback in this area where there's 2,742 and the average is 469, and this 2,742 at this level. So someone bought it, and I think they broke out the, they broke out. So I'll look for a pullback. All right, nat gas also, the selling came from up here. I couldn't catch it though, it was just too, not easy. But I think there's a pullback opportunity here, and let's just see what the numbers are. Uh, 974 average, and at that level, which is 360, 3.6, it's 5,253 at this level. So I think it's going to pull back, and their buying area. We'll see if it reacts. Again, there's no certainty at all. It's just you analyze the recent past to see if those buyers are still there or those sellers are still there. They may be there, they may not be there. We don't know. You have to check once it gets tagged, or that area around that area gets tagged, then we'll be able to determine if they're stepping back in. Other than that, there's no way. It's just a guess. But we know that this is not normal when you have 5 times the average buying at that price. So 974 is average, 5,253 is how much was bought across this level, and price went up. So that's obviously reaccumulation. Reaccumulation occurred here, and and price went up because of the reaccumulation. So we see what happens if they defend the reaccumulation and buy more at that price. They bought a lot. Are they going to buy more? If they are, you jump in. That's all you can do, and manage the risk. Same thing here, same thing there. This I'm looking for in euro. I'm looking for upthrust of this area, and then a reversal. That is going to be very telling. It's going to give because you see the selling. What did I do? Second. Selling is very clear. Look at this. Red, 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 red. Only 2 green. 2 green. 2 green. 1, 2, 3, 4, 5 red. Simple as that. Big red, little green. What do you think is going to happen? Well, based on supply-demand situation, supply is more supply than demand on this down move and this up move. Considering both, who can argue? More supply than demand. So, and what I really like is that this here is already forecasting lower prices. This here is forecasting lower prices. Just like this here, forecasted lower prices and made lower prices, right? So volume forecasting lower prices already. So I like that. All right. So now we have to. Now I guess we just wait. All right. All right. That's all, folks. And maybe I'll give a lesson now. So give me 1 second. So a simple thing we'll start off with on balance volume, right? OBV. And then we'll go into volume profile. All right? On balance volume and then volume profile. All right? So on balance volume, the main function of on balance volume is based on the premise, or based on the I don't want to say fact, but based on, it's not even an assumption either, so based on the building block that volume precedes price. All right, volume precedes price, which means it leads price, which means a higher high in volume precedes a higher high in price. Similarly, a lower low in volume precedes a lower low in price. So all you really need to do is use it for that key function. Now, it can get really much more complex if you go down the rabbit hole and start using all the sophistications, but this is the main key function, and honestly it should be enough, right? Because this is what it's used for. Volume precedes price. So if you go online and you look this stuff up, you'll see, oh, it's used for confirmation, or it's used for as a momentum indicator. That's not the key function of OBV. OBV is the base of it is volume precedes price. So you just look for higher highs and lower lows. And why does it do that? Why? Because of one reason. OBV analyzes accumulation and distribution in a very, very simple way. So let's just cover that. As price does this, what's going on here is redistribution. What OBV does, because it adds the green bars with the red bars and gets a net sum of volume, it sums up the volume here, and it will look like this. Because the volume on the down bars is greater, that's one reason, or there are more red bars than there are green bars. That could be the second reason. In either case, those are the two indications that there's distribution going on in this bear flag. And when it's going on, even though price is going up, OBV will crack. It will crack. It will make a low. All right? Because either there are more red bars and their volume is being added, summed up, or the red bars have more volume than the green bars in this consolidation. So the cumulative net sum of the green bars and the red bars will show will be lower. even though price hasn't broken down yet, it will go low. We'll make a new low. Same thing on the upside. So that's all. So OBV, it basically what it's doing is it's a tool that's analyzing accumulation and distribution by getting the net sum of the volume of green bars and red bars. And that's probably the simplest way, really the simplest way to identify whether accumulation or distribution is going on within a consolidation pattern. So it's good. It's a very simple way of doing things. Obviously, it's not always right, but many times, I mean, look at this. Over here, it predicted a higher high would be made while it's in the consolidation when it goes into lime. It goes from green to lime right here. Already predicts a higher high is going to happen. Here, it predicted it already happened. Here, it predicted the lower low is going to happen, and it happened. Right when it went from, to red, right here. On this red, it predicted that it's going to break the lows. So, I don't know. So this was nice. This is what I want to see. I want to see a rally, and I want to see a pullback. And now is the time to analyze the accumulation or distribution when in the pullback. So rally, pullback, green, right there, right? Similarly here, you have a rally, pullback, okay, right there. Right there. Before this, it's already predicting the crack. Right there. See that? It's predicting the break before the break. But the key is you need to analyze the pullbacks, right? You can't just willy-nilly use various colors and think it's gonna just give you, a magic forecast. Just have to analyze the position and all of that other stuff. So this is a good area, like right here. You see this? This is a rally. I don't know what it is. It looks like a rally because it broke this OBV base, right? This base here is broken. See this base? It broke. That's a bearish sign. And now it's creating a base. Is that a base of accumulation and distribution? Since it broke that base, it could possibly be distribution because this looks like a down rally because of the heavy volume. So, time to analyze the base to see if it's distribution. If this low here gets taken, right? Game over. It's predicting a lower low. So a lot of times OBV will do this prior to price, and there's your forecast. It's telling you that we are going to make a lower low or a higher high, right? The key is not to just, I have it colored so I can clearly see it, but you get the idea, all right? So the next thing is volume profile. So again, OBV analyze accumulation and distribution in bases. In bearish consolidations and bullish consolidations, you want to see if OBV is making a new low or a lower low, and in bullish consolidations, you want to see if it's making a higher high. And if it is, it's predicting the direction. That's it. That's the key function. And I really like the bases because they're telling me that, it's probably redistribution and all of that. All right, now let's go into volume profile. Volume profile. All right. Again, both OBV and volume profile can be used for accumulation and distribution. The way volume profile does it is you have a rally, right? As soon as you have a rally, right? You know that there's accumulation. There has to be accumulation. If price went higher, there's no way for price to go higher without all the selling at lower prices to be absorbed. So it was shaking and dancing over here, and all of it was absorbed. That's the only way price will shoot up. Price is shooting up because the supply has been absorbed at lower levels. Only after supply has been purchased at $4 will price go to higher than $4, maybe $5, because all the supply was bought. Okay? At 4. So now what you want to do is profile this leg and see. Well, this is what I do. I mean, so this, just profile it and you see where the buying activity is. When you see where the buying activity is, very likely you're going to get, let's just draw, you're going to get a distribution. Draw. What is it, a B shape? You get a B shape. Not like that. Because I can't really draw it. Let me see if I can do it like this. Yeah. So you will get, you profile the rally, right? Let's say I profile this rally. Over here, it's going to be a bump, and then a lesser bump, and a lesser bump. So this bump was the accumulation. This bump was the accumulation, and all that buying led to high prices. So the key levels of accumulation is what you want to take a look at, because when price comes back to it, maybe they'll buy more. And if they do, price will rise. So when I am looking at this over here, what do I see? I see when price went down, there was buying activity here, right? There's buying activity here. And then when it went up, when it tried to break resistance, there's a hell of a lot of buying activity. So someone bought here, and I guess they struggled here a bit, maybe absorbed against this supply, right? So there's buying and selling, and price went up. But so why is this important? It's important because someone's willing to spend a lot of money because they view this price as a good price. So this area, when it comes back, their accumulation may get defended, meaning they might buy more. They bought here, then they bought here, then they bought here. And how do you know they bought? Well, price went up, didn't it? So they must have bought. If price was going down, must have sold. More buying than selling, or where the buying was initiated. Sellers sold into it, but buyers came first. And they bought whatever they bought, and that's why this level is important. So now, as price comes back down, you see this spike is where there's a lot of buying. How much buying? Let's take a look. At that level, right, at that high buying level, within this buying block, you had 2,742, whereas on average, the amount that's bought at price, the average is 469. But here they bought 2,742. More than 5 times. 5 times the average. So chances are that when this thing pulls back, these guys will want to buy, right? Because they bought there before. That's all we know. In the past, they bought there before. We can't say anything else, but we can say, hey, if you bought this much, it must be a level of interest, a good level, and there might be buyers still there. We don't know until it goes there, and the buying kicks off again. But what we can do is we can analyze the data here and say, oh, they loaded over here, right? Loaded about here. Initially, the buying took place at this low. Then they bought more here. And that price is going to go back down there. And we have a good data point saying that, 2,742 were bought here. Maybe they'll buy more, right? So this is important to note. You don't want to just rely on some crazy, some pattern and say, oh, this is a bull flag, bear flag, head and shoulder, or whatever, or a candle pattern that looks like this or that. Wouldn't it? You want to know what the buying is, and how much is it, so that you can have an idea of what levels are strong. And how do we judge what levels are strong? Basically, levels where there was a lot of buying. If there's a lot of buying, strong level. If there's not a lot of buying, not strong level. And beyond that, it's just highs and lows. Highs and lows, because that's where demand overtook supply and you had a turn. And at a high, supply overtook demand, so you had a turn down. So these are areas, right? In any case, both the volumes indicators, whether they're OBV or whether it's profile, they're analyzing buying and selling activity. We may call that accumulation or distribution. OBV does it with bars and summing the volume, creating a net sum, so you can analyze consolidations and bases to determine if there's accumulation or distribution within them. And profile will show you where strong accumulation or distribution occurred, because you have bumps in the volume showing heavy buying, heavy trade activity here, heavy buying activity here, heavy buying activity here, and will show you the level that the buying activity was in. This data is very important, and this is the major advantage that we have now versus a long time ago. We have the tools to analyze the data. So you need to have the data, you need to have tools. All platforms can do this. These are pretty common now. Every platform has profile, every platform has OBV. Yeah, so you can do this. All right, thank you all. Have a good day. Bye.